Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, and welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge and financial freedom. Today, I've got a few headlines. I've got one about Tangem wallets, obviously, because, that's the title of the video. I've got one on the housing supply, kind of touches on the economic state of things right now, and then another one to kind of go with that with the Japanese yen and US dollar. But before we get all to that, let's dive on in and get you prepped for some success today. I've got the stock heat map pulled up. We've got Apple sitting down from yesterday, just like the rest of the market. As you can see, it was very red for yesterday. But in the pre-market, it's looking like we might get a little bit of relief here for just a little bit before we kind of continue some of the trends to the downside. So Apple was sitting down 1.33% from yesterday. We've got it sitting up at 0.38 in the pre-market. Nvidia, the one outlier for yesterday, sitting kind of neutral, up 0.35% from yesterday. Sitting up almost 0.6% in the pre-market, and there it goes, up 0.6%. We've got Berkshire Hathaway sitting down almost 1%, down 0.95 from yesterday. In the pre-market, sitting up 0.21%. We've got Amazon sitting down 1.09, and in the pre-market, doing pretty nicely, up 0.68% right now. We've got Eli Lilly sitting down 1.19%, and the pre-market not doing as well as the rest of things, up 0.06%. ExxonMobil also sitting down from yesterday, down 0.68%. We've got it sitting up in the pre-market just a little bit, taking back half of those gains, up 0.34%. We've got Tesla, which was sitting down a little bigger than everything else was yesterday, down 3.3%. In the pre-market, doing a lot better than everything else is right now. It is up 1.53%. Microsoft also doing a little worse from the rest of that sector, sitting down 1.32%, and the pre-market sitting up 0.59%. We've got Google sitting down 0.7%, and the pre-market taking back almost all of those gains, sitting up 0.62%. We've got Meta sitting down 1.43%, taking back about half of those gains, or those losses, and sitting up 0.64%. For the crypto side of things, we're sitting pretty green this morning. We've got Bitcoin sitting up 1.75%. We've got Ethereum sitting up 1.09. XRP's up 1.16. BNB is kind of neutral this morning, but it's still sitting up. It is up 0.16%. We've got Solana sitting up 1.39%. We've got Cardano sitting neutral, just a tad down 0.27%. We've got Dogecoin sitting up 2.02. We've got Tron coin sitting up 0.93. Avalanche is up 0.85. And to wrap it on out, everything else on that top side is sitting kind of neutral. We've got Toncoin down 0.13%. Chainlink is up 0.01%, and we've got Shiba Inu sitting up 0.24%. Let's hop over to the economic calendar real quick. We don't really have any too heavy data coming out for the morning. It's the housing price index month over month and year over year. Light data drop. The S&P Case Shiller Home Price Index will be the slight market mover for the morning, coming out at 10 o'clock, and that will be month over month and year over year for that one. We do have another light data drop with the Dallas Fed Services Index, and other than that, it is all preparation for New Year's Day. We won't have any more big data drops until later in the week on Friday, as we had talked about on yesterday's show. So let's hop over to the Fear and Greed Index. We've got the stock market back in fear, below 30. Like I was talking about yesterday, we were probably going to see some lower numbers, and I'm looking for some extreme fear on the stock market side of things before we really get that move to the upside. We got a tick to 28 and fear. For crypto, we are down a point and 64 and greed. So another little move to the downside, as we are sitting right below the golden pocket for Bitcoin again. So we'll have to dive on into that after we hit the liquidation heat map and see what the chart is showing us. We do have some liquidity for the 24-hour chart sitting right to the top side of us, above that 94,000 range that we've been unable to maintain, sitting at 95,000, about 400. That is a hot spot, the main hot spot for the 24-hour chart. We do have two lighter hot spots sitting right below us, right at 91,456, and right below that sitting at about 90,965. And for the higher term time frames, if you take a look at that 3-day, we can see most of the liquidity is residing to the top side. We do have a light hotspot sitting right at the lows at 90,800, and the top side liquidity is ranging all the way from about 95,000 all the way up to 95,500. We've got a little break in between that liquidity before we really start piling back up again at almost 96,000 and going all the way up to 96,200. Zooming on out just a little bit more, take a look at that 2-week again, and you can kind of see, like the rest of that, most of that liquidity resides to the top side. With the move down that we've made, we've taken out most of the bottom side liquidity, and we are all stacked up right at that $100,000 mark. So let's say good morning to the chat real quick before we hop into the Bitcoin chart here. We've got Kyle Fields in here with the yo. We've got username saying hello, hello. Now I can clearly see BC's beard has a shine to it. So he does have a neck. Yeah, I put a little bit of product in my beard this morning. Got to get the beard lotion in. It's an every other day thing. So some days are shinier than other days. I do put beard oil in every day though. So that's more of a duller shine, and you don't always get to see that one. We've got Alexandra G in here as well. Good morning, Alexandra G. Hope you're having a great morning. Username CNICAG. BC has that smooth morning drive voice. Well, I appreciate that. I've got a voice for radio. I don't know about the face though. So let's hop in to the Bitcoin chart. As you can kind of see, we are sitting right above the golden pocket right now. We made a move to the top side of it this morning as we went live. Before the show, we were sitting right below it, and it looks like we're going to try to make a little move to the top side and see if we can turn that into some support. But as you can kind of see here, the money flow is still kind of red. Let's zoom it on in there so you can kind of get a better view. That money flow is still decently red. It is slowing down though, looking to move a little more sideways. So a potential to turn that golden pocket into some support and maybe grab some of that top side liquidity sitting right above us at that 95,000 mark, where we saw that liquidity on the liquidation heat map. That's going to be the top side of this green candle here, going to be that 95 about 200 range, and we wicked above that on that candle. But on the way back down, that's where you saw some shorts put in, so that's where that liquidity is lying. We might make a little move to that top side to grab some of that liquidity and clear it out today. You do see some kind of nice signals here on your 1-day chart to see we are close to bottoming. I did say the other day, though, that I feel like the real bottom is going to be confirmed here this week or so. So definitely still got a bit of potential for some downside movements here. So just stay calm and wait for that confirmed bottom, because with the money flow still being so red on your daily chart, it does kind of bode for some lower prices. We are bottoming out here as we go a little bit lower and a little bit lower. So really waiting for that floor to get hit where we really see that money flow switch from red to green. You do have the MACD, which is kind of looking to go sideways, but still has plenty of potential for some more downside movement here. The curvature is not completely set here. As you can kind of see, if I zoom it on out, it does look kind of curved, but it definitely has the potential to just hit a bounce off that indicator line and drag down just a little bit more. We're really going to have to wait on that liquidity to rescue things. If you zoom it on in, take a look at that 4-hour chart. You can kind of see here we're getting a bit of liquidity coming in here on the 4-hour chart. It is ticking up and going from light green to green, so that is a nice thing to see for a more shorter term time frame. You are looking like you are kind of topping out just a bit here on your RSI primed, but your MACD definitely has a little bit more room to run before it probably falters here on this zero line, especially considering that the daily chart is kind of bearish still. So seeing another little pullback to this golden pocket on that about 94,000. It is a little bit higher than 94,000 for the golden pocket, and turn that into some support would be a nice little move to make. But I feel like we might drag down just a little bit more and retest some of these lower prices here at about 90,800 to 91,000 again, because there's plenty of buying pressure in this range, but I feel like the bears want to push it just a little bit lower. That weekly chart is kind of bearish, and the monthly chart didn't look too pretty either. I know I didn't show that monthly chart, but that candle does not look amazing. As you can kind of see here, the 1-hour chart is also kind of topping out. You do have the curvature on your prime oscillator. Your money flow is still kind of green for the 1 hour, but could very quickly switch to the red. It is light inflows as everything is kind of getting a little bit toppy here on the prime oscillator. You still do have some room to run on that MACD though. As you can kind of see, it just crossed to the top side of your zero line. So a little bit of pump for the morning before we drag back down is definitely a move to take a look at. I do see a lot of selling pressure here right about that 95,200 range, which is also where all of that topside liquidity was residing on the liquidation heat map. You zoom it on in just a little bit more, take a look at that 15-minute chart so we can kind of get a gauge for the morning to see where we might kind of falter at. You do have your prime oscillator, with the money flow sitting nice and green, you had your overbought and oversold signals that were basically completely ignored as we've moved sideways and continue to go up. It's just switching from your dark red back to the light red here after that overbought signal and the reversal signal flash, and the money flow stayed nice and green. This is what we want to see on our daily chart, which will confirm the bottom is in and that we are back to moving to the upside. Sideways movement, as username, sideways is always boring. Sideways is boring, but sideways action is also a nice stacking up point. So if you've got the dry powder moving in a sideways range in a slight up and down pattern around this golden pocket, has all been nice accumulation zones. So we did it back here. This was all nice accumulation here. We did it back here for a brief second. That was all nice accumulation. You also had another little chance back here where you could have had nice accumulation below that golden pocket, and back here where we were really playing in that range for a brief second. We got the move to the upside and back down. That was all nice accumulation area. So sitting in a range where we might move back up just a little bit before we kind of see some more accumulation happening. And that's what some of these bigger players have been waiting for. They push the price down just a little bit, and then they accumulate back up as people panic just a little bit. That's where you see a bunch of this, a move to the downside. People panicked, people sold, and guess what? They accumulated all of that sold Bitcoin, and then the price is going back up, and they'll do it all over again. So just waiting to kind of see where we top out here, which I think is going to be where that topside liquidity lies. You do have the prime oscillator, which is sitting right at that point where it's ready to go back up. The MACD is looking like it's got another little breath of movement to the upside before it starts dragging back down again, and I think it might drag back down kind of hard here. And that's where we have plenty of bottom side sitting at 92,700 all the way down to this range here sitting at 92, about 90,890. So depends on which chart you're really looking at. Let's hop over to this news article real quick. I did see a few chats. Let's see. Near finally hit under $5 for a bit. Of course, back over. It's holding good. I did have that chart pulled up before the show, so I'll take a look at that. But I do think we see a little more downside, especially considering that I think we're going to see a little more downside on Bitcoin as well. So we'll take a look at that near chart for you, username. I do think we see about $4.75 potentially being hit on near for a downside target before we really see some move back and some breath of life breathed into near to move back to that $5 range. Username said, I sneezed out dry powder. Well, that sounds like a great way to buy some more crypto. Let's zoom in on this article real quick. We've got Tangem wallet collects user seed phrases via email glitch. Cryptocurrency wallet Tangem fixed a critical security vulnerability on its mobile app that collected certain users' private keys via emails. The fix came after Redditors repeatedly called out Tangem for putting investors' funds at risk by exposing their private keys on email accounts and to Tangem employees. On December 19th, a Reddit discussion on Tangem's operation gained traction. It claimed the wallet provider allowed private keys to remain on email histories. The Reddit user, a Klanga, added that Tangem had not provided a sensible reaction when the issue was pointed out earlier. So User private keys remain in both user email history, Tangem email history, and perhaps in some Tangem ticket tracking systems, and are available for Tangem employees, which makes all Tangem users compromised. They also claim that the original Reddit post mentioning the glitch was deleted for some reason. Tangem issues a timely bug fix. Tangem acknowledged the issue on December 30th and said that the incident arose from a bug in its mobile app's log processing, which had been fully resolved. Tangem also provided a breakdown of the situation. What was the issue? When creating a wallet with a seed phrase, the private key was mistakenly logged in the application logs. These logs could later be accessed during interactions with our support team. Tangem's official website, which logs all version updates of its mobile application, did not mention the details about the December 30th update. Tangem also confirmed in its Reddit response that all logs and attachments sent to its support team were permanently deleted, ensuring no residual data remains. Tangem is accused of downplaying the situation. According to the company, the bug affected a small group of users and they are being contacted proactively for caution and support. It could have affected a very limited group of users, specifically those who use a generated seed phrase and then immediately submitted a support request through the app. It does not affect any other users. While Tangem pushed out an update on December 30th to prevent further leaks of seed phrases, some crypto community members called out the wallet provider's muted response. Tangem did not immediately respond to Cointelegraph's request for a comment. And this is why I don't really use a lot of wallets. I am a hardware wallet kind of person. I do have a software wallet that I use to move from exchange to my hardware wallet when I have accumulated enough. So hardware wallets are going to be your most secure option, and this is a problem going forward that we kind of bodes a little risky for the crypto community, especially when you see that there is that potential in some of these software wallets for your key to not be as secure as you really think it is. And that's one of these things where you take on more responsibility in crypto, and part of that, when you hand away some of that responsibility that crypto is really about, you also risk some of your security in things like this. If there is a support team to kind of help you with your wallet, there is that risk that you give away some of that security that crypto is all about, and that's not what we want to see. I do really stick with hardware wallets. It is a bit of it is a slight pain at sometimes. It's a pain that I am always happy to bear, though, because of the fact that I don't have to worry about things like this. Nobody can get access to my wallet seed phrase because it's not built into an app that I'm communicating with people about. If there's a software issue, I have to handle all of that myself. If there is another problem, I have to handle that myself. And that's where some of these software wallets hold a bit of potential for less security. And crypto is all about security. And if you really want to take on the most security, you want that hardware wallet to keep your money safe, because it is your money and you need to treat it like your money, because if there is that potential for your seed phrase to be leaked, then there is that potential for your money to be taken. So just stay safe out there. Be very choosy about what you go with to store your cryptocurrency. I am going to take a quick look at gold before we really hop into the other article. I was going to look at gold and silver, Kind of goes in lockstep with some of what we've been seeing for the economy. Before we really dive into things, you do see when your economy is looking a little risky, you do see these precious metals get that boost to the upside. And when the economy is kind of in that state where it's unsure, your precious metals get that move to the downside. And we did get a big move to the downside here under our key support levels on both gold, and if you hop it over to that silver chart, on silver as well. Silver got that bigger break to the downside under key support. And we're sitting below my Fibonacci extension range on silver, and gold is looking to drag it down below those key levels as well. So definitely got some more potential to break below that 2,600 range on gold. A great accumulation zone if you're going to be holding gold for the long term. There is a big order block here, as you can kind of see. We've got plenty of movement up and down on either way, both ways before we got that move back into my Fibonacci extension. Kind of same thing here with silver. If you move it on over, you've got us sitting back in a order block where we got plenty of movement both ways and are looking to break below that. We haven't really been here since back in September of this year. So looking to retest some of these prices after we broke below this strong support line that we had been maintaining very nicely. This was drawn from a higher term time frame, as you can kind of see there. Off of those candle bodies from the daily, we got a bunch of that. It kind of went from all the way back there. We did negate some of that for a brief second. I think it was actually from the 4 hour that was drawn. From the 4 hour? Yeah, from the 4 hour. We got plenty of touches there. Went through some of that wick in action. We did get a brief break below, but have pretty much maintained that until now. And as the dollar has been strengthening, we have seen some weakness in some of your precious metals. So don't worry, BC. I'm holding down the chat. Good thing I can entertain myself. Well, thank you, username. I hope you're having a great morning and a bunch of fun in the chat. You should definitely drop any altcoin requests you have for me in the chat after I hop into these other two news articles that are very quick. I can take a look at all altcoin requests right after I take a look at the Dixie, which ties into that second news article. Username saying, hopefully you're ready for Vegas. Don't forget I am the driver. Things will get cray. Well, I'm definitely ready for Vegas. I've never been to Vegas before, and so it will be a nice first trip to Vegas, especially when it's going to be for the Bitcoin conference, which I've always wanted to go to, and finally get that first chance to go to. I'm super excited about that one, as well as meeting a lot of the Piper Academy team and some of our watchers as well. I did see a request for Sui, and of course, username wants near. So I had that one pulled up earlier, but we will definitely take a look at near as well. Username saying gold will pump again. It most definitely will. We're just like the rest of the market, waiting for that floor on things before we really get that move to the upside. We did not get our Santa rally, so things have been looking a little bit bearish and bode a little bearish for the beginning of the year for TradFi. So let's hop into this news article real quick on the housing market. Which says housing supply hits 4-year high due to unsold inventory pileup. Housing supply hit a 4-year high in November amid a growing number of homes sitting on the market unsold, Redfin reported on Monday. Active listings, which reflect the total number of home sales, rose 0.5% month over month and about 12% annually in November to the highest level since 2020, according to the real estate brokerage. Yet, about 55% of those listings sat on the market for at least 60 days without going under contract. That is the highest share of unsold inventory for any November since 2019, and it is up roughly 50% from November 2023, the report showed. Of those that did not go under contract, the typical home was on the market for 43 days, which Redfin said was the slowest November pace since 2019. A lot of the listings on the market are either stale or uninhabitable, said Meme Loggins, a Redfin Premier real estate agent. There's a lot of inventory, but it doesn't feel like enough. Homes 650,000 or below typically attract the most competition from buyers, according to Loggins. However, sellers in that price range are most likely to overprice, which causes their property to sit on the market, she said. Well-priced homes in good condition are flying off the market in 3 to 5 days, but homes that are overpriced can sit for over 3 months, Logan said. Texas and Florida have the highest share of unsold inventory among the top 50 metros tracked by Redfin, while Providence, Rhode Island, and Milwaukee and Wisconsin have the lowest share. This kind of bodes for some of that the used house market, which has been kind of struggling a lot. We do see more of a drive towards your new homes, especially since, as it had said, a lot of the inventory that is on the market right now is either stale or uninhabitable, which means that a lot of people don't want to buy the cheaper home to put the time and effort into repairing their homes, which kind of drags down some of these other costs and is really all moving towards new home builds, which is why you've seen that do pretty decent this year, considering that the economy is not sitting at an amazing point, that we've been seeing some contractions here, especially as the rest of the market has been struggling a bit. You did see some life being breathed into manufacturing and a few other things as well. As we've been getting towards the end of the year, we'll kind of have to see how that all starts out for 2025 under a new administration with new economic policies. We'll kind of gauge how things go within that first 100-day window of 2025, because we might see a giant shift into some things. We might see that inflation tick back to the upside. But if you can see your dollar remains strong, which is what this next article is all about, you might negate some of these inflation pressures, especially if your government is also able to negate some of their spending, which they are hoping to do with some tariffs. Let's hop over to this other article real quick before we take a look at the Dixie and jump into some of those alt requests. I did see username saying homes in the mitten was down over 24% in October, but up 1.1% in November. Homes here not selling and prices are getting crazy. Well, crazy to people from here. New Yorkers, probably a drop in the bucket. And that's one thing I was talking to my buddy about here. Is like, as those rates have increased on your loans, he was seeing the valuation of his home decreasing just a bit. He got locked in at a nice rate back in 2019. So his move right now, as his home is being devalued by the market here, is to take advantage of it and do some upgrades on his home. He's looking at new siding, doing some internal reworks of his home, and that will increase the value while it's low and while he's still locked in at a good rate. So borrowing a little bit of money against his home to increase the valuation of his home while it's down, and he's still taking advantage of that 4% interest rate that he's seeing on his home loan. USD JPY yen chips away at the dollar's dominance as traders ramp up rate hike bets for 2025. This is something we've talked a lot about on the Piper Academy, especially since there's still half of that Japan carry trade that is still in the works. So let's scroll it on down and get to the meat and potatoes of the article. Bank of Japan is expected to, go away. There we go. Oh, it did not. Let's get back to that. If it would go back. I don't know. Nope. It's not going back. But let's see. Where was that? There we go. Back to the article. Sorry about that. All right. Bank of Japan is expected to gradually raise its benchmark interest rate next year as it struggles to control inflation pressures. The pair turned away from a 6-month high of 158 yen after traders acted on their conviction that the Bank of Japan will move to gradually raise its benchmark interest rate in 2025. The dollar yen slumped to 156, with the yen erasing about 200 pips from the US dollar's dominance. While a speculative move, the rush to buy up the yen's highlights investors' expectations for the next year's central bank moves. The Bank of Japan has been reluctant to hike borrowing costs, saying that they need to stay low for the economy to continue growing or at least not take a dip. But with loose monetary policies comes the risk of inflation flaring up. And that's what has been happening in Japan. The core inflation rate, which strips out prices of fresh food and energy and is monitored by the Bank of Japan, rose to 2.4% in November from 2.3% in October, its highest level since April. Over to the U.S. side of things, the dollar has been largely buoyed higher by recent moves from the Federal Reserve and President-elect Donald Trump. The Fed has stated it is looking to cut interest rates twice next year, downwardly revising its guidance from 4. In other words, rates will stay higher for longer. The White House, in the meantime, is looking to bolster the dollar by lowering taxes and slapping tariffs on imports. And this is something that, as we've talked about on the Piper Academy, we're looking for that first rate decision from Japan to be a rate hike decision. And at the same time, if you want to see your dollar maintain some of its strength, the U.S. Might need to cut rates for that first rate decision of the year, and then kind of hold off for a little bit, especially if you don't want to see a bunch of money flooding out of your U.S. market and into Japan, which creates even more strength for the Japanese dollar, dragging things down just a little bit more for the Dixie, especially as you're going to see as we've been seeing some of the inflation tick back up in some areas as you go into the new year. Some of your industries that got a little boost from the holidays and things like that will slow back down. So overall, you're going to need to kind of counter, as username says, counter Japan hike. And the way to do that is to cut rates. And as we saw before, when we saw Japan not have a rate decision in either way, and the U.S. cut again in December, we got a nice little move to the upside off of the Dixie. which is that strength of the dollar against all these currencies. And that's what we want to maintain as we've seen inflation, just like Japan, just like Europe, just like Canada, tick back up to the upside just a little bit. If we want to counteract some of these inflation pressures as US citizens, then we want that rate cut to happen at the same time that Japan is hiking rates. It will maintain the dollar's strength, especially as China's been doing all right in some areas. And if we're going to levy tariffs on them, we want our dollar to be strong, to have cheaper imports, to negate some of the cost to the American consumer. Let's take a look at the Dixie real quick. As you can see here, we got a little bit of a slide down, looking to maintain this $107.50 range. That's kind of where we might see a little more downside, a lot more downside if we lose that range. That is a key local resistance area from here and all the way back here in 2022, which we have been we were unable to break to the top side of for quite a while. We got a little move to the upside towards it last year in 2023, and when we were unable to regain that, really got that move to the downside, and we've finally broken above it. It's been a 2-year battle, but we are finally above it, and to lose that does not really bode well for the dollar, which is why as we see some of those rate hike decisions be more and more plausible for Japan, we want to see that rate cut decision be more and more plausible for the United States. As you can see, let's pull that up for the CME FedWatch tool and kind of get a gauge at where we're sitting. Right now, we're sitting at that 88% chance for a no rate cut for the U.S., which I think if you want to see that strength in the dollar from your investors, you might see that sentiment switch, as well as the Fed chairs are going to be switching going into 2025 as well. I had an article about that yesterday. I didn't really go over it. I didn't have the time, but a lot of these Fed chairs that are going to be voting on these rate decisions are switching going into 2025. You do have some more hawkish Fed chairs that are going to be in there, which believe that monetary policy should be a lot looser, which means that maybe that 2 rate cut decision might switch up just a little bit, especially since they want to breathe heavy life into the economy. We'll just kind of have to see how 2025 really plays out with the new economic policies that are going into effect, as that article had talked about. Sorry for that blinding white screen, but let's switch back over to TradingView and take a look at some of those requests that we had. ATH or PEAQ if no one else wants to call their shots. Well, might have a chance to take a look at both of those username. I've got about 15 minutes where I can take a look at things. PEAQ. Give me an exchange that you would like those taken a look at as well, so I can get you the best information that you're wanting there. I did have SWE requested, so let's hop on over to my alt page and scroll on up to take a look at SWE. I guess it's, there we go. There's SWE for you. And as you can kind of see, it is sitting a little higher on the fib retracements than some of your more established alts, and like Ethereum and Solana. Solana sitting way down here at that 50 right below that 50% range. You've got SWE maintaining some of that strength. It is looking to reclaim that 382 here, but we're getting very toppy signals on your 1 hour chart. If you zoom it back out to that 4 hour, you can kind of see the same thing. We're getting kind of toppy here on our MACD. Does look like it has a little bit more room to run to the top side before it really confirms that that top signal and drags back down. The liquidity sitting on your 4 hour is extremely red, uh, and is going to need to switch back over to that green the same way that we're waiting on the rest of the market to switch back to inflows from the outflows that we've been seeing for this past week or so when we didn't get our holiday Santa rally. And that kind of looks to bode into 2025 for our real bottoming point, which is what I had said yesterday. I'm not looking for a move to the upside until probably that first complete week of January, where it's going to be next week. Looking at potentially seeing a little bit of some pump on about, let's see, the probably the 6th, the 7th, where we really start seeing that floor has been put in and we start getting that move to the upside. With the holiday being what it is, seeing no heavy data to really drag the market in either way, except for Friday. And then we get that close of the market again on the 4th and the 5th for the weekend. We might see a new sentiment coming in for the first real week of January, and that's going to be that 6th and 7th was where I was looking for a pump of the market. We do have a bunch of downside potential for SWE, with the 4 hour looking a little bit bearish. Your 1 hour was also looking bearish. That MACD has got that curvature. Your prime oscillator got that curvature, but you got light inflows coming our way. Just battling with that prime oscillator as well. As you would see, I don't know if you noticed there, it was sitting red and then switched back to green, and it is now switching back to red. So really waiting to see where that money flow drags us. You've got potential here to just to make a higher low and try again to reclaim this 382 as some support. But if you really see that money flow stay red, which is very easy for it to tick back over to the red as you zoom on in here, take a look at that 15-minute. The money flow does look like it's kind of faltering here on that 15-minute. As you can see there, zoomed on in, it is getting that curvature, as it is failed to maintain some of that strength. You did get the big push of liquidity in here that got the big move on up, as we got that second breath of liquidity in, which was a little bit of higher than the first one. It wasn't able to make a higher high in that range, which kind of leads me to that view that we might lose this 382 for just a little while before we try to reclaim that. Your MACD does look extremely toppy, and your prime oscillator has got plenty of room to run to the downside. Seeing that we are a decent ways off. We're sitting at that negative 45, and most of the bottoming here for SWE is around that 114 to about 120 range on your prime oscillator before we really get those reversals. So really looking for some of those higher term time frames to maintain their green liquidity and really hold this 382. I do see this being a fair value gap as well. So seeing about $4.16 if Bitcoin does get a little bit of some dragging or is able to maintain some of its strength there. And as you see the Bitcoin dominance still ticking up, that does mean that some of these alts are selling off. So You've got plenty of room back here at about $4.15, which was the mid-range of that gap, all the way down here to about $4.12 to really kind of hit that bouncing point for SWE before we try to reclaim that 382. I did see near requested. It's a favorite of mine and a favorite of username. So SWE needs some VC to pump it up to bring the hype back. Well, I did see an article about that I completely negated, which kind of makes me wish I had hopped into that article. It was all about VCs and their outlook for 2025 and crypto projects. So maybe I should have talked about that one. Would have tied in nicely to that SWE and your comment there. Let me take a quick drink before I dive into that near chart. All right. Let's zoom it on out to that daily view because it's been quite a while since I've taken a look at near. And as you can kind of see here, I had some lines drawn out that I wanted to see turned into some support. And I said that if they didn't get turned into some support, we would really drag down on things because they were key levels from way back here when we got that push up in March. That's an interesting topic, BC. TF, cancel the other two requests and read that. I'd have to go find the article. It was way back there. So maybe I'll touch on that for tomorrow's show. I'll go find that article for you because I know the VCs have a lot of things that they've been looking at for the crypto market. Oh, Retro Tech in here. Good morning, Retro Mike. I hope you're having a great morning so far. You hopped in right at the end of the show. I'll probably see you in the Alex O Crypto chat after the show, though. So, as I had said, for near, if we didn't get that break above and maintaining of that $8 level, we were probably going to come back down. I haven't talked about near for quite a while, and that's because I was waiting on that bottoming price. I haven't been trading it. I've just been waiting for that new accumulation zone. And I think that's going to be kind of down here below our 50% line on our fib retracement. As you can kind of see here, the money flow is red. You're seeing that curvature on our prime oscillator. King D, you going to be live tomorrow? I most definitely am. I might be a little late though. I might be a little hungover, so I'll be dragging some butt. But yes, I will most definitely be live. You can kind of see here on your MACD as well. It is getting some sideways movement, but it's still kind of looking down a little bit. So definitely got some more potential for some downside on near as well, especially with Bitcoin's dominance. Let's pull that up real quick. Ticking back up to the upside here. There you go. It is getting that move on up, which means a bunch of these alts are selling off. And that's where I've been looking. If you zoom it on in here to that 1 hour chart, I think that's where I'd taken a look at it. There you go. Let's zoom it on back in. As you can kind of see here, we're getting some faltering on your MACD. Your prime oscillator is getting that curvature. Still nice and green. The money flow just ticked green. But when you had taken a look at that 4 hour, that money flow is just going to the red side of things. So really going to need, like the rest of the market, that liquidity to really come in and rescue things. Your 4 hour is getting curvature to the upside on your prime oscillator, but it is light red, and with that money flow ticking back to the red, is definitely looking like it might go a little bit lower. It did get that bounce off of your 50% retracement, but looking to kind of go a little bit lower as you look at some of these lower time frames. Your money flow is green, but it is kind of faltering here the same way that it did on SWE, where you got that second breath of liquidity coming in, and it is unable to make a higher high there on that. So looking at the MACD, you've got that break below your indicator line and is looking to drag back down. It's got some heavy curvature towards the downside. The 15-minute is also went from green to red to light red, but is ticking back down and is looking for some more bottoming. We don't have any reversal signal flashing, no oversold signals flashing, so really looking for those bottom side targets. And if you zoom it on out here, you've got a bit of an order block here in this range where you got a nice little battle here all the way through before we broke below it, and that's going to be that $4.76 range. I see Crypto Billy here this morning. How you doing, Crypto Billy? I loved your video that you dropped this morning. If y'all haven't had a chance to go check it out, you should definitely check it out. It was very, very motivational. It touches on something that I do on a daily basis. So I loved that video this morning, Crypto Billy. And for near, seeing that $4.76 to top side about $4.83, which I know was that target you were looking for a username. You might see that happen this week for you. So that $4.83 all the way down to $4 and about 76 cents was my target here on near. It is a nice little order block that I would really take a look at. Let's draw on out there and not make it purple because that's where I put my fair value gaps. So let's make it green. Let's make it green so that we know it's for buying. I don't like that green. It's kind of ugly. Let's go to the other green. That looks better. There we go there. So that's that bottoming target I'd kind of look at for near. It is a nice juicy area below $5 before I think near really tries to regain some of that strength. As you can kind of see on the 15-minute, we just take it back to the red side of things, the dark red on your prime oscillator. So looking to drag things down as your money flow is faltering on the 15-minute. Is still red on the 4-hour and is not really maintaining that strength on the 1-hour. It is just a light green as we got that move to the upside and is looking to falter as price goes back down. So I did see a request for ATH, so let's try to find that for you. ATH, I see it on OKX and Bitfinex. I don't know which one, so we're going to go with OKX, see how much price history it has on that. We've got going back to July. Let's see, ATH on Bybit. Same thing. All right, so we'll go back to OKX. All right. Let's kind of get a Fibonacci retracement drawn out from the low to the high here. See where we're sitting on things. Ooh. There we go there. And looking like we're trying to hold that platinum pocket there on a retracement. You can kind of draw another one out here, the low before the move up to the high, which was off of that 50% line rejection. Let's get it on point. There we go. Let's lock that one, zoom it on in there, and hide the bigger one. Oh, the bigger one. There you go. As you can kind of see here, we are sitting at the golden pocket here for the shorter one. Let's zoom it on in there to kind of get a view on our 4-hour to see where money flow is sitting and to see if it's got some life being breathed back into it. and it looks like it is not having any life breathed back into it. That 4-hour chart is looking a little bit bearish. We do have some reversal signals showing, but it is breaking lower on your prime oscillator. Your MACD's got a bit of curvature, but it is looking like it's been losing that battle with our indicator line. We're really going to need that money flow to come back in and rescue things, especially as it looks like we're rejecting off of that golden pocket on this local fib retracement. Let's zoom it on into that 1 hour, see how that money flow ticking green just a little bit here. So you might get a slight move up above the golden pocket there at about 6 cents and 6.25 there. So looking to really maintain that. You do see a bit of some topping signals here as on the prime oscillator as we're trying to push back above that golden pocket. And you've got your MACD, which has some more room to run to the top side of things. So if we are unable to maintain that, you do have a large order block sitting below the golden pocket where there's plenty of buying and selling pressure starting at about 606 or 135, and it runs all the way down here above that platinum pocket to about 05607. So I'd really look for that bottom side target at about 05607 to potentially get a move to the upside, especially since some of these especially since that higher term time frame on the 4-hour was looking a little bit red. The daily was also at that same indicator where we're having some red outflows and has definitely got some more room to run to the downside. Thank you for everyone that showed up today. It is 7 o'clock, and I know Alex O is it should be live right now. So thank you for showing up today. I appreciate every single one of you. Also, after Alex's show, you should definitely check out Crypto Billy's little, I think it was like an 8-minute video. It was extremely beautiful. Go check that out. Also, tune in to the rest of the Piper Academy. We've got Piper and OC with the morning market report. We've got Trade Intuition, who does some great TA and helps every single person that needs some help on their TA with at the Trade Academy at 4 p.m. Eastern Time. We also have the Crypto Nightcap with TradeFly and FD White that goes on at 8:30 p.m. Eastern Time. And we also have Markets After Dark, which I think is taking the night off tonight with the new year. I believe Lunar Beaches said he has family over, but we will have a New Year show with both me and Lunar Beaches for Markets After Dark at 11 p.m. Eastern Time for the 1st. So thank you for tuning in today. I hope everyone wakes up because today's going to be a good day.